Let's get going. Yeah, so I said there was something of a distribution pattern about this NASDAQ. Yeah, we got very extended on this MACD, and the volume was falling off. So we needed a pullback, and we came right into that zone pullback. So we retraced that breakout area, which is very, very common, a boomerang. It's boomeranged right back to the breakout area, and we're beginning to see this build back up. If we can close above this 640 either today or tomorrow, then we could potentially get back there and beyond. If we break up, pull back, we could go to 14.5. If we stay down here and close under 350, then we're going to see some lower numbers. Okay, so it's a very nice a big three wave. Now we've got a 1, 2, 3 wave correction. So this is potentially, it's a very critical point here. So we have got the averages coming back. We just need to see if that can pick up and hold. And like I said, whatever the NASDAQ does, the rest of the market tends to follow. So the problem with the US at the moment is that yeah, stocks have been very, very expensive. They went crazy last year. Hang on one second. I could hear myself, sorry. Yeah, so this is a huge support area. Now, let me just put a bit more meat on the bone on here. It's worth spending time on this NASDAQ, I think. So the main zone is there. So we could still come, or we could happily come back to 13,000, 13,100 or 13,100. But if we can dip into that and potentially get above this 630, 640, then we can get going up to these highs. All right, so, and jobs on Friday. So at the moment they're yanking it down until we get the jobs number out. So we potentially got one more leg in this. If we can only reach, if we can only just knock our heads into or under that 14,000, then this is not going to last. Then we need a deeper pullback. Okay, so there's the structure in that chart. So it's a question of whether that can work. Now, Dow made a new all-time high today. So broke up from late March, spent April, after the initial breakup early April or into mid-April, spent the rest of the period just in a tight range. That saw us pull back, and now we are making a new high. So we're seeing, but what we're seeing here is potentially the end of this current cycle, because we're seeing a lot of defensive stocks outperform techs. So the threat to the stability of these highs is the very fact that we are seeing a move into safe havens. Because if you look at the, where is it? Hang on a second. I'm just about to get the 10-year notes. So 10-year notes have broken out of this pattern from the low of 5th of April. And if we see a sharp break above that, above here, we've got a gap up there at 13.5. That could spook the markets. If these get aggressively long, then the flight to safety is potentially continuing. Volatility index is still low. We had a spike yesterday into resistance, and that's fallen over. So if we can stay low, as long as we don't break out of this little area and stay in this consolidating area, then this market has got a chance to continue to the upside. If we start closing above this 22 with an increase in bonds and an increase in the dollar, yeah, just about to look at that, then we're seeing a flight to safety. Okay, let's look at the dollar index. Now, at the moment, this is just a bounce. This is nothing more than a healthy bounce at the moment. Potential through. Oh, hang on a second. Sorry about that. Yeah, so this is just a healthy bounce. If all we do is jump into 92, then this is coming lower. Right, so let's start looking at stocks now. Okay, so overall, the fact excuse me, with a new high in the Dow and the Nasdaq potentially finding its feet, then we've got the prospect of this market being sustainable for short to medium term. It is obviously we're in May. So yeah, selling May and go. This is typically a time where you see a lot of profit taking and money coming off the table. So particularly in terms of the US, not so much Europe, but particularly in terms of the US, it's worth taking money off the table. That's the bottom line. Let's look at the FTSE. So at the moment, Europe's a different story. This is coming back to these April highs. So we just knocked our heads into a lot of resistance, but that's threatening to go higher. Okay, if we close above this area here, then we could make our way back to 73, back to 2020 highs, or certainly back to this breakdown area. That's zoned because we've actually got a gap fill up there at 7,400. So if we can sustain this, then we've got the potential to really pop up and break higher. And the DAX got a pop today as well. So that's similar to, this is similar to the Nasdaq. This has come right back, a hell of a sell yesterday, boomeranging back to the breakdown area. So that's boomerang back from the 29th of March. So we broke up into that high from the 29th of March. We've done a complete boomerang at the moment. So if this is going to hold, then we could come back to 15.5 and break up. Oops. Okay, so we've got a lot of resistance up there. If all we do is pop above it and immediately close lower, then this has had it. That's toast. We're going to see some lower numbers. All right, but on the face of it, that's a healthy pullback, and we've potentially got the structure there. As long as we can get above this 15,200, we've got the potential to crack higher. Right, now let's look at some US bellwethers. Seeing as Michael's interested in I'm of the opinion at the moment that the US is needing a deeper pullback. As you can see, this is pretty much mirroring what the Nasdaq's done. So all we've done is come back to the 89-day average. Sorry, that's a 50-day average. That's a 50. With the 20 above and the 200 underneath. So we're winding back into support. If Apple can stay here and close back above 129, we can go higher. If we stay here, if we can't get above this 129, 130 and break this low, then we're going to find ourselves potentially back at 120 pretty quick. We've seen two hefty sell days. So on the 29th and yesterday the 4th, we saw a lot of selling. So at the moment, any pullback into that area there, if we bump into that and fail, then this is coming lower. If we just hold here and break that low, we're coming lower. They got production problems. And like I said, the earnings ratios and the margin that you're seeing in the Nasdaq is reached the bubble territory. Hence the reason why we've seen this market come off. Okay, if we look at, let me get my list up here. I'll talk about a sector in the US that I am very interested in. A sector we've not talked about for a few weeks. Sorry, let me look at where's my US 30? Here it is. So here's some bellwethers. Let's look at Visa. Struggling. Let's look at Boeing. Looking as if it wants to come lower before the volumes come out of Boeing. Let's look at Goldman's. Okay, Goldman's is at the moment happy. But if we can't break through here, then we are in trouble. At the moment, this looks as if this could break, because if we close above 350, come back and hold 350, we could keep going. But you can see the structure in there. Everything's poised for Friday's jobs. But the heavyweights, this is Caterpillar, broken higher, looks higher. Look at this MACD. We were very, very divergent. MACD is a lovely tool. Everybody doesn't use it. You should consider using this. You got that divergence in the histogram. Now we've just broken up through the midline, and this looks as if that's still got legs. Let's look at the weekly chart. This is Mr. Biden that's pushing this up. Well, that's one of the reasons why this is pushed up. Where can I take it from? Well, it's breaking above. It's such a strong trend. That could pull all the way back to 200 and still be well within the trend. Anyway, you get the idea. At the moment, this is, it's only 237 it's from 85. It's come a long way. Yeah, okay, so it's nearly 3 times this 85. 240, 255. So 255 is 3 times. So the next stop looks as if that's 255. Any pullbacks are to be bought. So you can see the more solid stocks, the value stocks in the US are getting bought. The growth stocks are not at the moment, which tells you there is a potential sort of inflection in this market. Let's look at, this is Disney. Let's look at Discovery. Still not doing it. Wow, I mean that's a hell of a weekly chart, isn't it? So that from October last year into March, it just goes to show, just to make the point, markets don't go straight up. So potentially that could come down, still come down to 32, 33. And I would have thought if the market does get queasy, I would have thought you'd see that. Obviously, it's holding the trend line at the moment. We had a higher close on the 19th, week beginning on the 19th. So it's still in that 19th zone. As long as we stay in that zone and don't start closing underneath 34, this may be the pullback may be over. If it's consolidating, I would have thought it wants to dip lower before it pushes up. I'd rather see that come down to 30, 31 at least. Where are we? 36. But all the time we stay in this zone, we could start to recover. Okay, so let's look at, I'll stay on the theme of the US for a second, because I just want to talk about this sector in the US. Now, even this sector has seen some substantial pullbacks. Talk about healthcare. So Bristol Myers got up to 67 nearly, had a sharp pullback. But I think this is of all the sectors in the US, I think this one, there are some issues with this sector. If that can pull back to 60 again, then I'd start to get back in there. It may have some lower number, given the queasiness of the market at the moment. That may have some lower, that may punch lower before that gets ready for another leg. AbbVie is broken out. Medtronic has been on a nice run. Talked about Medtronic for ages. It's a good one to sit in. There's the breakout pattern. Well, the initial breakout was down here. We had a big push on the 13th of July last year. Fell back into that a couple of days later at 93, and we've just peaked at 130. So any pullbacks to 100 or 120, maybe as little as 120, are viable in Medtronic. This is a good brand. This is a good. They've got the leading manufacturer of diabetic products. My daughter has been type 1 since the age of 4, and Medtronic products are her lifeline. Yeah, anyway, so there's lots of other examples. Let me just quickly grab one. Teledoc. Now this is a growth stock. So this is on my watch list. This is a growth stock this obviously benefited from COVID, but this is definitely one to watch. There's going to come a time when I'm going to want to get back into this one. Right, so I think we could come all the way back to 100 on this. If the market allows, that could come all the way back to, so that's the breakout area. So we've got way too hot, and it's just not doing the business. It's coming down on volume. So that's a very bearish sign. If it comes down on volume, then expect lower numbers. But even on the way up, the volume was not significant on the way up. So it's hardly surprising this run out of steam. Yeah, once we started to break up here, the volume was very weak. Right, let's go to UK stuff. Let me pull up my UK. Let's just go over the miners because we spent a lot of time looking at the miners. We'll stay on the weekly chart. So higher close last week, flat this on PAF. We'll look at gold in a second. If we can just break this little area here, then we've got the potential to get up to 20 plus. So it's still got its work cut out, but looking okay so far. Fresnillo's had a pop. Oh no, it hasn't. Sorry. That's struggling. Potentially looking. I think that's going to be low before it's going to go higher. Griffin sitting up, going flat, and POG. So POG hit a lot of problems with that 28, 29. So it's pulled back. So we had a 1, 2. As long as we hold this, obviously we need to. If we start closing under that, then we potentially had it. But I think this is just pulling back into. This is a key support. You can see how important that 25 is. It's very divergent. Look at that divergence. Very divergent. Made a new low. There's the divergence. With a higher low in the histogram. So the momentum is potentially with the upside, but we just got to get out of this area. Right. Let's look at, let me go over my other UK stuff. Again, I'm going to call these out just to save time. Just have a look at the main UK bellwethers. Right, BT 170. Not surprised. I would have thought we'd get to 180 fairly quickly. We are looking extended, but onwards and upwards. Very strong stock. End of the year, we've got a gap fill at £2. So that may just keep going up to £2 anyway. Rolls. I might as well get it on the screen now. Let's get BT on the screen. I'll just rattle through the others. There's the main resistance up there at 180. Rolls still holding on to £1. IQE has retested that main support of 54.50. Which you know what, that actually makes me more interested in that stock. I'd love it to dip underneath it and then pop back up again. Andy or John Woods had a nice pop yesterday, but has pulled right back to 274. I'm not a great. It's a good trending stock. It's not one I would trade personally. Yeah, Vast has hit, since it hit £5. That's very must have touched 450. That looks to me as if that wants to come and see 457. We're going to see at least 450, I reckon, in that one. Let's rattle through the others. Hammerson. I think Hammerson might be coming off the boil. We're at 38.60. Tullow, that pullback was very nicely bought. That's up at 56. It's struggling a bit here. I'm just wondering if Tullow might need a deeper pullback. Sage dipped, but holding at 635. Money Supermarket. Money Supermarket is a good chart, hence the reason why I talked about it. Let's have a look. Let's keep it on the weekly for now. So you can see here we had a structural breakout back in January 19, and we got the same repeat, potential same repeat here. So we're holding above the structure here. Good week last week, flat to slightly lower this week, but it's got the potential to try and wind its way back to those highs. So we're holding above this area here. We may come back to 250, 270. That wouldn't be a big deal, but we need to. But in theory, we should see at least 290, 295. In theory. All right, right. Carrying on the theme. Tattoo Chef is struggling, so I'm leaving that. 88 Energy. Yeah, 88 Energy is struggle. It's consolidating. Banking sector, okay. Yeah, I mean, if you're in this long term, do nothing. If you're interested in this, that might come and retest the penny mark. It looks good. The volume's really dropped off this week. It's a bit of a sort of a British pump and dump at the moment. It's got pumped up. Everybody's jumped ship, and they're not coming back in yet in decent volume. So you might well see that come back on itself because the volume is out of it at the moment. Right, let's look at let's have a look at Barclays then. A lot of blue on the UK list, which is good. Barclays 176, right? Okay. Yeah. Now, banks tend to do well when you've got higher yields in bonds. So they come right back to this, they boomeranged back to 14th of April levels. So you might see that come lower before that starts another leg up, because the main support down there is 150, 160. I would have thought you would come lower before that comes higher. Notice how we were under the midline. We've been under the midline since the middle of March on this histogram. So basically that's saying the momentum's coming out. And we're not divergent. So you may see that. I think that you're probably going to see a lower number in that. You might get, unless of course we just consolidate here. I would have thought you'd see 170 again. I don't think that's going to pump higher before that does another test of 170. Right, let's look at ABF. Yeah, this is interesting point in its life. If that hangs on there, then that should go higher. It might dip before it actually, it's got a gap, isn't it? It's got a gap. I think that one might come lower before that's it would be a boomerang set up to come back to the 15th of Feb. I would expect to see that come lower unless we start closing above 23, 28. Then that you may not see any lower numbers. Glencore, yeah, anything to do with precious metals. That's right up to resistance, but looking higher. That could potentially get to 322 a plus. You're absolutely right. It's coming up on volume, so that's very, very bullish. So at the moment, there's no. If you want to get in on this, you're going to have to buy high. At the moment, £3 is the pullback. We've closed today at 3.10, give or take a penny or two. So look at Glaxo. Look at Glaxo for a while. That might dip before that makes its way higher. That looks as if that's got 14 written on it. ITV. Oh, ITV's doing well on volume. It's got a lot of resistance up there at 128, but it looks good. I'm not a fan of this particular stock. I think it's very vulnerable. Major resistance at 140. It's doing well. Doing very well. So look at always interesting what the airlines are doing. So I think that's going to come lower before that picks up again. In fact, I definitely, that's 2 days of lower closes. I can see that coming back to 950. On EasyJet. What else do I want to look at? Let's have a look at Lloyd's. I haven't looked at Lloyd's for a while. So that's doing really well. Persimmon looks lower. Right move. It's clinging on. God, that's hit a major resistance level. Look at that. 3 touches of that and close lower. So if we hold here and start closing above 610, then I think we can break up and get up to potentially up to 7. If we start closing underneath this, then hold on to your hats, because that could tumble. M&S. Looks lower to me. It's going nowhere at the moment. I've been in this pattern, so we broke up on the 9th of March, 8th of March. So we hit 163. I'll tell you what, if that closes under 150, that's toast. Vodafone, right, okay. Let's have a look at Chewy. Let's look at well, if we can come back and close that gap, then we've got a gap underneath it at £4. And we've got a gap above at 483. So if we can come back, if we can come back and fill that and hold, we could then make a wave up to 480. Let's look at Vodafone. So what happened to you? You got filled at 121.82. Very, very aggressive volume. Increase in volume, very aggressive. So we had a bad hair day on the 20th of April. It closed higher pretty much every day ever since. So where are we now? We are 140. Right. Well, I'm not too surprised at that. Let's look at a smaller time frame. Where's your 121.82? Well, according to this, it's not been at 121 for ages. You give me the right figures. You punched in the wrong numbers. 26th of Feb. How could you get filled down there at 121.82? That is weird. Well, according to this, it's not been anywhere near it. Okay, anyway, right. Well, it's worked very well for you anyway. Right, let's leave it there. Obviously on Sunday I will do a big session to keep us up to date. But I'm off now. Thanks very much for joining me. Look out for updates and enjoy the rest of your week. Thanks, guys. See you later. Bye.